I'm Jess Harris with CE Floyd, and in today's episode of Industry Tidbits, we'll be discussing builder's risk and the advantages of the GCCM having ownership of this policy. Let's build on this.
Welcome to Industry Tidbits with our host, Jess Harris, your go-to resource for today, tomorrow, and the future.
Welcome to today's episode. Today I have Tom Stanton, Safety Director at CE Floyd. Hi, Tom. Thanks for being
Jess,
with us
how's
today.
It going?
Good.
I'm glad to be
Thanks
here.
for being here. Good. Our second guest joining Tom and I is Christine Holman, Executive Vice President of the Rowley Agency. The Rowley Agency is different from the average insurance broker in that they provide the best risk management consulting available to their clients at no added cost. Hi, Christine. Thank you so much for joining us today. Can you tell us a little bit more about what you do at the Rowley Agency?
Sure. Good morning, Jess and Tom. Thanks for inviting me to this session. I've been with the Rowley Agency about 35 years, and I handle the internal operations of our agency. We service all of New England, providing construction insurance for the clients that we service.
Awesome. Well, let's jump right in, and let's start with the basics first. So, Christine, if you could start by telling us what exactly a builder risk policy is and why it's needed in construction.
Sure. A builder's risk policy is considered a first-party contract, and it's providing property insurance on the structure as it is being constructed. The policy can also be adjusted to pick up existing structures in the event that it's a major renovation project and the permanent insurance carrier is uncomfortable with remaining on the existing building while it's being worked on. The reason why the construction site needs a builder's risk policy is because the general liability policy, which is a negligence-based policy, provides inadequate protection in the event of a loss on the site that damages the structure itself.
Awesome. And so, Tom, do you have anything to add to that before I jump to the next question?
I think Christine nailed it. I think that's a perfect summary.
Okay. And then, so what is mutual waiver of subrogation and why is it important?
A mutual waiver of subrogation actually takes the finger pointing out of the formula in the event of a loss. The general liability policy has several exclusions that can really muddy the waters in the event of a large property claim. The exclusion that is most damaging is the care, custody, and control exclusion. It's a very gray area in a general liability policy, and the carrier, if they deem that you've been working on, if you have the entire building under your care, custody, and control, they're going to exclude coverage. So under the general liability policy, if you have the property policy with a mutual waiver of subrogation, all the parties are protected. There's no finger pointing. The property policy pays. You can get the job back on its targeted timeline, and the carrier just pays and everybody moves on. Everybody's made whole.
Okay. And this question is geared towards you and Tom as well. What are some challenges that you've both encountered with builder's risk? Christine, I'll let you go first and then have Tom build on that.
Sure. A lot of the challenges come when the builder's risk policy itself is not written correctly. It's not protecting all parties to the contract. It may have some exclusions where the owner or the general contractor is not properly protected. So there's a lot of things that you can also, especially if you are insuring the existing structure within the builder's risk, then you have different valuations you need to work with. Oftentimes, the existing structure is only written on an actual cash value basis, and the renovations are written on a replacement cost basis. Another area is typically the owner of the policy is responsible for the deductible. If the owner is buying the coverage and they buy a very high deductible, oftentimes they try to shift that deductible down to their contractor. And at the time of the claim, the insurance companies are going to review the contract between the GC and the builder's risk, the contract between the owner and the GC. And, it can really cause some issues.
Tom?
And I think highlighting what Christine is saying is that when a claim does happen or occur, a loss on a job site, if the owner owns the builder's risk policy, they're responsible for that deductible. And what we've seen happen a number of times is when that loss occurs, they want us to file it, or our trade partner to file it with one of our lines of business, whether it be GL or for us to cover the deductible. And just the way the policies are written, unfortunately, it lies with the owner to cover that deductible per the contract. So for them to understand that when a loss occurs, if they own the builder's risk policy, they usually own the deductible as well.
Okay. And then kind of bouncing off of that, what are some of the advantages for the GC owning the builder's risk policy?
Well, if the GC owns the builder's risk policy, then the insurance agent for the GC has an opportunity to make sure that the builder's risk policy is written per the contract requirements. Oftentimes, the contract is specific in the types of perils that they want covered. And we also want to make sure that you buy down the deductible as low as you can get it based on the type of construction being done, whether it's wood frame or fire resistive is going to determine what type of deductible the carrier is willing to offer you. But you always, when the owner is buying it, he's thinking that he wants to insure for a catastrophic loss, but he's also in the back of his mind thinking he's going to pass on that deductible to the GC. As the GC buying the coverage, they're going to buy the lowest deductible possible so that they don't have an out-of-pocket burden.
And Tom, what's your perspective on that?
I believe it's communication. When a loss does occur on the job site, if depending on where the deductible lies, if it's with the owner, it usually causes some confusion and some challenges. But if it's with the general contractor, that owner doesn't have to manage that claim. They don't have to file the claim, and communication, and it just smooths out the whole process and how it's handled. So in both situations, the incident, the loss is taken care of. But what we've seen from our experience is when we own the builder's risk policy, that loss is much smoother and easier to handle from an owner's perspective.
The other thing that you find with the owners is even though they buy the builder's risk policy, they don't want to file the claim because they don't feel that they were responsible for the claim. Okay, so what they don't understand is that contractually they have to file the claim. And we see a lot of pushback on large claims because the owners fight back and they say, no, we're not going to file the claim. We didn't cause the loss. And they have a hard time understanding why their policy has to pay when somebody else caused the negligent act that caused the damage. Okay, and they're not insurance professionals, right? They're owners. They're building buildings, and they don't fully understand the ramifications of buying the policy and not having the policy written correctly to protect all parties to the contract. We also find that the owners, for instance, when they put the insurance specs in their contracts, they don't want to be responsible for materials in transit or materials at temporary locations. And the reason for that is they're thinking, they're not on our site, we have no control over those materials. And they think that they're paying a premium to have those covered under the builder's risk policy. Actually, most often they're throw-in coverages. But if the contract says that we're not going to be responsible for property in transit, even if the policy is providing some automatic coverage for property in transit, the insurance company is going to push back on that. And they're going to say, no, contractually, we don't have to pay for this loss. So having an insurance professional look at the contract see how it reads, make the requirements or the changes prior to the execution of the contract so that the builder's risk is written correctly, protects all parties to the contract, has a mutual waiver of subrogation built into the contract. There's no finger pointing. The insurance company pays, everybody's made whole. There's no bad feelings between the GC and the contractor and the owner and the subs. It's just a much smoother way to do it.
And Christine, correct me if I'm wrong, but the mutual waiver of subrogation, this line of business is one of the only ones where we don't need permission for that. Is that correct?
That is correct. That is correct. The property policies, whether it be permanent insurance or builder's risk, is allows a mutual waiver of subrogation without approval from the insurance company. It's the only line of coverage that allows for that. With that being said, however, there are some insurance companies, it's more so if it is part of a self-retention group and such, where the carrier will not allow the mutual waiver of subrogation, or you have to advise them prior to executing one. But if you refer to the standard AIA contract, it has a mutual waiver of subrogation built right into the contract. And the reason for that is because it is standardized language and it is standardized in the insurance industry. So it's not that we're asking for something that isn't commonplace. It's very commonplace.
Excellent.
Awesome. And so I think like this, in a very descriptive nutshell, brings together all of the aspects of builder's risk that, our listeners might be interested in learning about. Just some of the key tidbits. I just want to sum up what the both of you have talked about today, Tom and Christine. So the first is, just like you said, Tom, permission is not needed for mutual waiver of subrogation. The second is whoever owns the BR risk policy should own the deductible. And third, the GC-controlled BR policy reduces an owner's exposure and contention in the event of a loss. And Christine, if people want to reach out to you to continue this conversation, what's the best way to contact you?
They can either drop me a quick email, or which they can find off of our website, which is www.rowleyagency.com, or you can certainly call my direct line, 603-410-1658. Love to hear from you.
Awesome. So thanks for tuning in today. We really appreciate you joining us, both of you, Tom and Christine, and all of our listeners. Like, share, and follow us on social media for more amazing industry tidbits. Let's build on this.